Hey guys, I'm sorry, I cannot hear any sound. Denis, are you on mute?
Yeah, sorry. Sorry, just automatically went off. Yeah, basically, shall we start with a short intro of everyone? Just in the background, I mean, where you come from professionally and basically how you've been in sort of digital asset space and in the mining space, and a bit about your company. I mean, what's the main focus and what you're doing. I'll start with myself, and I come from traditional sort of banking, project finance background and metals mining. In the last 3 years, I've been working in sort of Bitcoin mining space with BTC mining operations. Our company sort of have over 80 megawatt deployed facility operating in Eastern Europe with a focus we've been doing also in our regions. That's why it's very fascinating for us always going into this type of discussions. From the CryptocurrencyMining.Group, we actually who is hosting this webinar, and I co-founded it back in August as a sort of offline event together with Alejandro. We're pulling, just getting the networking together from a professional, basically, guys who are interested in mining and actual miners themselves. So I can pass now to Igor to speak about, and then we'll just go to Lukas and Igor.
Yeah, thank you. My name is Aegir Magnusson. I work for Advania data centers in Iceland. I started in the hosting industry back in 2006. Been working with Advania ever since. So Advania is a Nordic IT company, and our data centers are located in Iceland. We have around 80 megawatts of infrastructure running in Iceland, and we have availability to expand as well if needed. We have been working in the crypto industry since 2013, and I've been working with and servicing most of the large companies in the crypto mining industry ever since. You know, we are hosting, you know, majority are ASICs we are hosting, and but also we have large GPU miners with us as well.
Okay, Lukas, do you want to, and then Igor can take.
Sure. Yeah, hi everyone, I'm Lukas Pfeiffer. Originally I'm coming from consulting actually, but since last 3 years I'm working for Genesis Mining in the business development. Genesis is has been there since almost the beginning of cryptocurrencies, mostly servicing customers with cloud mining contracts. And I personally have been focusing on building up our businesses in Eastern Europe and Central Asia. And yeah, I'm very happy to be here.
Yeah, Igor, if you want to take.
Yeah, sure. Hello, everyone. My name is Igor Runets. I am CEO of BitRiver Mining. We operate 100 megawatt facility in Irkutsk region in Bratsk, and building a couple of more locations right now. I am coming from traditional telecommunications and data center industry. Have been as I am since 2010, and I am in crypto since 2015.
Kirill, yeah, and Alejandro.
Hello, everyone. My name is Kirill, and I'm from the institutional lending desk at Nexo. I've been passionate about growing early stage startups ever since I remember. So for the last 8 years, I've done different growth and sales related positions in startups and been in the crypto space since 2016. And yeah, it's always been my passion to tinker and try to make, try to establish product market fit for new services, for innovations that have not yet matured. And I think the crypto space is one of the most relevant spaces to do so. So I joined in 2016 and been in Nexo since 2018. For those of you who don't know the company, we're a comprehensive financial services company. Our core business is crypto collateralized credit, credit lines, where essentially you use crypto as collateral and get access to fiat and stablecoins. Besides that, we have a lot of different supporting services, such as earned interest account, credit card, and other retail-oriented financial and crypto-related services. And at the institutional lending desk side, I've been involved mostly with maturing the institutional crypto lending space.
Looks like Jake is online now. Hey, Jake, can you hear us? Okay, well, I'll introduce myself. My name is Alejandro De La Torre. I work for Poolin. Poolin's a large mining pool. We're mining everything from Bitcoin, BCH, BSV, Ethereum, Zcash, Litecoin. We've been around for about 1.5 years. In the last year, we've grown from nothing to second largest. So I think today we're the number one largest Bitcoin mining pool in the industry. And we just started also offering financial services to our miners through our blocking wallet. We have lending, borrowing, and also you can earn interest on your coins, which is on your Bitcoin, which is probably the first. We are the first mining pool to provide these financial services to our miners, and we're very happy to expand that business and looking forward to see how our miners can use that to help their operations. Jake?
I think, yeah, Jake connected, but I think there's an issue. I think we will ask him to
reconnect or something.
Yeah, reconnect. And basically, I wanted to go into the second point, and actually, this is do a little intro for Jake, because this specific event, basically, which is we dedicate to the European space, because there's a lot of developments taking place. We see a lot of exciting things taking up in North America, which is very good because it's a big sort of a driver for the overall industry at the moment. And at the same time, basically, what was interesting to see a while back, over a month ago, I think, DGen, basically the company where Jake works, actually, they did a small report, which was interesting just to highlight what's happening in the European mining space. And this is actually brought to attention that European mining space actually was one of the first pioneers, basically, if you go back basically 16, 17, in terms of bringing up a transparency, let's say, to the mining community. It was interesting to see that it was mostly advocated with Iceland, Sweden, Norway, basically, sort of for driving the scene. And that's why we wanted to bring it back, the whole discussion, and where everyone basically participating in this panel can share views from their regions, because it's quite an interesting thing as well, because we have Aegir here representing Iceland and Sweden, which basically was one of the sort of pioneering region and one of the biggest operators there. And at the same time, we have Aegir, basically, with region which basically emerged quite quickly. Obviously, it was a history quite longer, but he can elaborate more. But in terms of having industrial scale operator, basically, this is something that has been a good evolution. And obviously, Lukas from Genesis, which has been the biggest, I think, one of the biggest advocates in the public space, because, I mean, all the Bloomberg videos we saw, and a lot of coverage was done also with the help of the guys who are Genesis and others. So it would be interesting to, if every one of you, just to give a slight outline, what you see on developments which were taking place in your sort of geographies, basically. If you can touch a bit on maybe regulation or other things, this overall sort of perception, competition, how you saw it, just to give the whole sort of listeners, viewers, an overview. So
yeah, should I start maybe?
Yeah, sure.
Okay. So, of course, originally we come from being in the enterprise business and been doing the regular, telecom industry business for many, many years. And then I think it was back in 2011, we first started looking into the crypto industry, when the first guys started coming into Iceland, looking at Iceland as a suitable location for crypto mining. At that point in time, in Europe, Iceland was probably the most well-known place in Europe with the lowest electricity price. Of course, later on, we've seen the price going down in other Nordic countries. So being, the first runner on the market, we kind of had a head start on many other places in the world. And, maybe a good thing that we started with here is, building the data centers from the ground up, utilizing the outside air here in Iceland for cooling. So that was something that, interested parties in Iceland were looking for. Here it was the ambient climate, and that therefore you could start up pretty cheaply compared to other places where you have to invest in very expensive cooling equipment. So it was kind of, good to be one of the front runners there in the beginning. So, being also, going forward, I think one of the benefits of, building here in Iceland is that we just started from building everything greenfield. So we were not repurposing any factories or anything like that. So we could also easily, going forward, when we were exchanging miners for newer equipment, it was quite easy to change the facilities to accommodate these new generation of miners going forward.
Okay. Shall we move? Lukas, do you want to jump in on out there on Iceland on our developments from perspectives of Genesis, basically?
Yeah, sure. So, I mean, from Genesis, so we've also started. Actually, yeah, our company started, I think, also in 11, 12, and while I was personally not with Genesis at that time, so we looked at in the beginning very different opportunities all around Europe. But our first, as Aegir is 100% aware, like our first like really bigger deployment and our first really bigger farm was also in Iceland. And so there has been also some cooperation also with Advania over the years. I think you've been good customers there. But also then we also saw other potential basically all around the world and try to dig into these potentials as fast as possible, especially as timing was so important in the first phase of cryptocurrency mining. Also with regards to what currencies to mine, it was like in the beginning probably a larger variety of currencies, which now we can see also in the market capitalization it's more and more a focus towards Bitcoin again. Maybe this will change, but let's see. And so actually we explored also other Nordic countries, like for example in Sweden, and also in Eastern Europe, Central Asia, we have also explored some opportunities. So we can see there like very interesting developments, and also for the future, I think in Europe there is definitely a case for cryptocurrency mining, especially as it's probably not only the more and more like the electricity price is important, but it's not the only component, but there is also more and more a focus on the best quality and the highest and the most advanced technology. So it will be interesting how this will be feasible also in basically in the first places again.
Okay. Igor, do you want to give us a view? I think it was one of the interesting markets which took off quite substantially in the market share, as we saw it in the hash rate market share.
Yes, sure. So when I was deciding on the location where to build the first data center, for me, it always was very important to find a place with the cheapest possible electricity, because it was initially core of the strategy to build the data center and be at the very bottom of the price curve. to be hedged during the downturns of the cryptocurrencies. So we have explored many countries initially, Europe, all the places in Russia, Central Asia, and we ended up doing business in Bratsk, which is Irkutsk region in Russia. The history of this region is kind of fascinating. In early 70s, Soviet government has built a lot of hydropower plants in this region. I will mention only a few of them. Irkutsk hydropower plant, Bratsk hydropower plant, Ustilimsk hydropower plant. This is kind of energy core of Irkutsk region. The initial idea was to use power of Siberian rivers to supply electricity to energy intensive industries. And the first industry which was consuming that cheap electricity was aluminum smelters. Now, when aluminum industry is not consuming that much industry for several reasons. First of all, upgrade of the technologies. We can observe a huge oversupply of cheap green hydropower. And this was kind of attracting factors for us. Couple other points here is that it's pretty conveniently located from logistical point of view. Border with China is just several hours drive from the facility. It's not that far. And climate is very, very suitable for Bitcoin mining. And we have been observing a lot of changes in the mining landscape in the region. When we have started building our facility, we were probably the first large-scale institutional type of data center in the region. And since that time, we see more institutional type, even smaller, although smaller than us, but institutional type of facilities emerge in the region. But at the same time, we still see a lot of retail mining in the region. There is one very important reason for that. In Russia, institutional enterprise prices for electricity is a little bit higher than residentials. For this reason, many people, kind of retail miners, don't have motivation to put their miners in large-scale data center and still run them from homes. Obviously, they cannot, there is no economies of scale and lower level of reliability, but this is probably one of the reasons why Irkutsk region is such a popular place for mining amongst retail customers. Like if you go throughout the region, you will find that many people just mine in their garages, in their apartments, because what they do? They are buying older generation machines and running them using very cheap residentials energy rates. We see at the same time very quick and strong development of institutional large-scale data center in the region. As I said, climate, energy prices, and also supportive regulatory environment and supportive local authorities.
Okay. Alejandro, do you want to give us a helicopter view from a mining pool perspective? How you?
Yes, thanks, Denis. Poolin is a Chinese mining pool. Of course, I'm based in Germany. The idea is, of course, we've been seeing the trends. I've been working in the mining pool business for many years, and we've been seeing a small trend, but in the last 2 years, much quicker of mining outside of China. So, of course, Poolin is interested in being there with the growth of the mining industry outside of China. That's the reason why I'm based in Germany. That's the reason why we're building a team here. And another good thing that we think is very important for miners is, of course, financing options, and that's why we also have a European team to help facilitate these deals and these options and these financing possibilities for our miners. And it's also a good way to connect, the Western world to the Asian world. We're trying to, bridge the gap there. And the mining pool business is, it's overarching, right? All the miners connect to us, or well, not all, but I would hope so. But what I'm trying to say is that, we're in a position where we can provide a lot of services to our miners. That we have the reputation, we have the technical know-how, so it's only natural for us to be providing different options for our users, our clients. And one of these financing options are very popular in the West. So that's something that we're pushing very hard. And we continue to see the trend of growth in the West. And I think with not only just through our financing options, but through financing options through many different avenues, we see that mining is going to continue to pick up outside of China.
Yeah, Kirill, do you want to add on the perspectives from Europe?
I'm fairly of the opinion that pricing of electricity is not going to be the only. Obviously, there's going to be technological know-how, but financing know-how is going to be the one of, let's say, the two main differentiators for miners. And as Alejandro said, there's a lot of different options. And it's a whole spectrum of services, starting from, let's say, crypto native lenders like Nexo, like BlockFi or others, and it goes all the way towards traditional financing like corporate bonds, corporate debt, and there's a lot of new tools that are coming at the disposal of miners, like hashrate derivatives, options, as in put and call options, which allow for hedging. And I'm going to come to this later, but I think having those tools gives us the tools to also, really make tailor-made solutions for each and every individual miner, and it gives also the miners the tools to become more mature business, right? And I think the key takeaway here is financing know-how. Relationship with lenders, and generally speaking, understanding what's out there would become a major competitive advantage. Yeah,
I mean, financing is our favorite topic. I mean, especially in our webinars, we're always trying to go in because I think this is the main driver for this whole sector going forward. I mean, for the next, let's say, 24 months, it's clear that the market is transforming sort of from retail to institutional model, and I think we'll see it. And as Igor said, there's still some operations of retail miners, and we probably will have them, but it's almost like you have a big warehouse, basically, or like a big supermarket, and they still have corner shops exist, and it will be a different kind of business. I just want to go back to geography, because I mean, the interesting observation that obviously for me personally, that I've been in the sector for like 3 years, I see basically that we clearly have a big sort of hubs for mining. Clearly China, has been always the leader. Basically, will trying to keep its position. Obviously, will slowly sort of losing to other emerging regions, but still in a good position there. We have a clear sort of the last 12 months, a good sort of and healthy development taking place in the US. But I think because I mean they clearly have a lot of sort of sources of energy. I mean, which a lot of sites there at the moment. I think is the lack of, let's say, due to logistics, the lead time, because I mean everything is shipped out of China, or at least that region, China, Malaysia. We see that clearly, as Igor said, that close proximity, I think he's the best probably out of everyone here, the best location in terms of lead time to the site. Europe basically it's still closer to, let's say, the source of manufacturing. But the other interesting factor is about the actual source of energy, because I mean, you have US, China is a sort of multi different sources of energy. What we have actually in Europe, I mean, if you look Iceland, Norway, Sweden, Russia hydro, like renewable, thermal. Basically, this is an interesting thing because I mean, from a source of energy, it looks like the Europe is more sort of sustainable in the sense out of, let's say, these three sort of huge hubs. So if you want to add something on that, just on a general note, I mean, that's
yeah, of course, of course, going back, Iceland has been, advertising quite heavily, the green and renewable energy we have here. And of course, the biggest benefit of renewable energy is that it's cheaper to produce. So in turn, you get lower prices. But of course, we are seeing more and more, competition than we did before in the crypto industry. So back in 2013, we were kind of alone in the market. There were not a lot of, data center providers providing space for crypto miners. Usually miners just went and built their own somewhere where they got very cheap energy. But now we are getting more and more players on the market, and we are seeing, a lot of new sites popping up in the US and Canada or North America region, as well as, Eastern Europe. Of course, for Igor, you were benefiting from the hydro as well, but we are seeing a lot of, places in the US coming up where there have been old aluminum smelter, for example, using, non-renewable energy. And for the Bitcoin mining industry, I believe it has an effect on the reputation of the industry, what type of energy you are using. Of course, it's maybe not apparent, but I think for the industry, within the industry, but outside of the industry, using renewable energy will benefit us going forward. And, as this has been, and then, of course, this industry changes quite rapidly. And now the market is changing again after halving, and it's condensing a bit and becoming more prominent, for people not in this industry. So we also have to be aware of how we are, looked at from outside, from players not knowledgeable about Bitcoin. So it's an important thing to focus on the renewables for sure.
I second this opinion. We see many institutional clients coming to us looking exactly for renewable energy. They ask us for renewable energy very explicitly and saying that they have mandate to do Bitcoin mining only with renewable energy. And I believe it's good for sustainability of the entire industry. Because when we see kind of all the power plants running on not renewable energy, it makes kind of us a little bit concerned. And I believe the demand for mining on renewable energy, demand for sustainability will go up over time.
Yeah. I think it's a clear responsible mining is like in the traditional metals mining. I think it will come to Bitcoin mining as well. I think more and more. The more and more institutional we get, the more and more, I mean, it's clear the sustainable factor will be sort of added into this whole structuring. This is actually what we also wanted to touch, which I think already was mentioned, is about post-halving, because, and this actually I wanted to merge it with another sort of interesting thing, because especially like Sweden, Iceland, I think you guys clearly had a lot of originally had a lot of GPU mining because you were pioneering in the sector. At that time it was some evolution sort of let's say the Bitcoin mining pro. So obviously the new hardware came in, but you still have a lot of sort of capacities which were sort of GPU based. So how the market is transforming from your opinion, because especially like with Ethereum going on a pause. So clearly what view you have on the altcoins. And the second thing is basically on a general sort of view, how you feel the effect of post-halving and sort of the quarantine, I mean, the bottlenecks for the shipment of hardware, just overall, just a general observation. So if you Igor, if you want to start.
Yeah, sure. So yeah, of course, in the beginning, our first client was actually, manufacturing his own ASICs, and so in the beginning, the ratio of GPUs versus ASICs was quite similar, but then in around 2015-16 when the S9s came out. The ratio was quite high on the ASIC part. Now we are seeing some of our GPU miners at least renewing the hardware now and adding some more GPUs in. So of course it's also good to have a mix, you know, even if the ASICs are you know, is the majority and the most power hungry, it's also good to have some GPUs as well to not put everything in one basket, so to say. And of course, given as we've heard, you know, there are some delays in deliveries from certain vendors on the market, and you know, what will be happening post halving is changing quite rapidly now, and some uncertainty on the market. But you know, interesting parts there. You know, we are seeing now or hearing on the market that some miner, you know, all miners that have started, you know, people are following closely if after halving, if some of the companies that are owning these miners are going maybe into bankruptcy. So I see a lot of people looking after that and maybe trying to go into auctions and buy miners on auctions, which they can then just bring into their facilities right away. And then, you know, there is no uncertainty on the deliveries and stuff like that. So there are a lot of niche, you know, it's good to play on the edge as well in this market, I guess. So not relying solely on the large manufacturers that can be, you know, have different delivery times than promised originally.
Is there anyone else want to elaborate on that point? Yeah. Okay. I think just on we already had some questions, which I think also leads to our sort of agenda about the financing. So this is where, as I said, I think we just want to, let's say, we all agree on the point, basically, that there's a transformation of the market, I mean, a business model, more sort of to institutional type of large-scale mining operations. But from your observation on the market, from the players you see, basically, from counterparties you interact, what changes you see in terms of the financing? I mean, what financing options? Because I mean, for us, it's always fascinating to have this discussion. How do you have access to working capital, you know, external? Because usually the miners, I mean, they're sort of trying to be in a self-sufficient model. But now going forward, we understand we need to be more sort of as a traditional businesses, you know, interaction with corporate sort of lending, you know, working capital facilities, anything else. So if you want to add from your side, from your observation, what you see on the market in your region and just overall from your interactions, so we'd appreciate that.
Well, I mean, we just started providing Bitcoin collateralized loans with partnerships with BlockFi and 3 Arrows Capital. We just started maybe like a week ago, but we're looking to. It looks good already. Already we have almost all the. We've already exceeded what we thought we were going to get in a week, so we're going well. And yeah, this is something that we can provide to all our miners. Including, and the good thing about this whole entire service is that it runs on the same infrastructure that we have as the mining pool. So our miners get the Bitcoin into that wallet, and already in that platform, in our wallet, blocking wallet, you can already, you know, apply for these loans and or borrow or earn interest on your Bitcoin. So it's a very easy way for miners to get into financing, and I think we're the first ones to provide this, and we're looking, yeah, that's something I just want to add.
From our perspective, we see also financial products which allow miners to finance their equipment purchases. We have been working hard over the past several months with several pretty large financial institutions who is currently in the very final stage of developing such products. We expect that in the next couple months, we will see many of those options available in the market. And it's getting pretty important for miners, institutional miners, to get high IRR and return on capital for mining devices using those options. So I believe it's definitely a very important change to the mining industry, because previously almost all miners have been buying the equipment using just cash at hand.
Lukas, do you want to add on that?
Yes, yeah, sure. I mean, for Genesis also financing has initially been a little bit different, because we were cloud, basically crowd financed by our customers. So by setting these cloud contracts online, we were always basically financing our build-ups ourselves. And so we are now also seeing this shift in basically, but not completely going away from our initial approach. So we are still having our cloud contracts, which is actually currently probably also due to, thanks to the Federal Reserve is picking up. And but on the other hand, obviously, we are more and more looking into traditional institutionalized players as well. And maybe also one thing which didn't come up is not only a collateralization on the basis of Bitcoin, but also on the basis of the machines itself, is something which we are currently discussing and which is very interesting for miners. Basically collateralize some hardware.
You want to add on from?
Yeah, sure. I mean, we are, I've heard about and talked to a lot of new players on the market in terms of financing. Recently, most of the offers have been, with quite high interest rates. So maybe, getting more competition in this market and making it more mainstream might draw down the interest as well to get more competition there. But of course, we've been also talking with some players who are looking at it from like a different perspective as well, like putting like hash power out there on a public market where you get like people with financing in place who are maybe used to buying Bitcoin straight from the market, but instead they are able to go in, and these are companies that don't know a lot about operating big mines or buying miners, running it and all that, but it gives them like an opportunity to buy hash power on the market, and that in return just get BTC in return instead of buying BTC from some exchanges or stuff like that. So stuff like that I'm very, very favorable for, but I think this is like something that we will see more and more of, companies doing business like this, more companies from finance as the crypto industry or the crypto mining industry evolves. I think these are the signs that we are seeing now, that is becoming more evolved and more like institutional players who have not been in crypto for long are moving into the market and changing the landscape a bit. So it's quite interesting to see what ideas are out there.
Yeah, that's true. Kirill, do you want to give a perspective from Nexo, basically, since I guess you are more on the financing side? I mean, how you perceive the mining space, basically.
Yeah, absolutely. I think actually we touched most of the options, so I'll try to more categorize it and put them against each other. So the first thing Alejandro mentioned was obviously the crypto native companies. So think Nexo, think BlockFi, where you can collateralize your Bitcoin, earn interest. So these are services that are native to the space, right? So they know they open options that were not necessarily available on traditional markets due to the nature of digital assets, right? On the other side, you have what Igor said, where you have more traditional financing, let's say corporate debt, where you can collateralize your land, your technology, or your machines. And generally speaking, that's very traditional corporate kind of bond kind of structure. So these are the two ends of the spectrum I see. In terms of what other options are there, I see two developments that are super exciting from my perspective. So the first one is the emergence of hashrate derivatives. Not because I'm going to be an end user, but because I believe this is a proxy for the maturation of the space. So the more products like this there are, the more miners are going to be maturing, and they're going to be exploring what's out there. So that's very good. That's very good news. The other sort of development I saw last month was around 10x growth in the number of options traded on CME. Volume is moving from Deribit to CME. Speaking of responsible in the context of the discussion of green energy, I think also it's the responsible thing to be trading on regulated and secure venues like CME backed and these traditional players who are providing these derivatives. And why are derivatives interesting is the important question. I think that they open two venues. So the first one is things like hedging, right? So you can insure against a drop of Bitcoin below $5,000, for example. So you can make sure that you're profitable in the next 6 months, whatever the price might become. And at the moment, that's still a little bit expensive. So you might have to pay a few percentage points for a significant amount of options that will allow you to have this insurance, but it's already there. And it will mature over time. Other options are maybe you want to enhance the yield of your BTC, so you can sell options and make sure that you earn additional premium on your long-term holdings, right? So this would be based on your view of the market, for example. What we're doing is taking a spin from the lending side and taking those tools to make sure that we can lend, in our regular facilities, but add additional flavor to it by using derivatives to make sure that either we can offer, let's say, a 0% loan, which is something that's not generally available right now, or offer a zero liquidation loan. How does that work? That is based on put and call options, which in different mix, you can reach your ideal, let's say, trade-off between the interest rate, your risk from liquidation, and the level of protection you're looking for. Just to give an example, if you buy liquidation insurance, for example, or just regular insurance, right? If the price is up below the strike price of your option, you would actually end up owning more Bitcoin than you started with. And on the other hand, if you're looking to, let's say, earn a premium or reduce your interest rate on your loan, you would actually be sacrificing some upside, right? So you wouldn't be taking profits all the way to 100,000, but you'd say, okay, I will sacrifice my upside above, let's say, $15,000. So in this sense, what I think is that derivatives and specifically options are opening a lot of options, which we are now not only exploring, but actively offering and selling to miners. Although they are perfect for everybody. It could be even a retail user who is looking to insure their 2 Bitcoins. I think it's specifically well suited for miners just because of the natural revenue stream that you have in Bitcoin. So I think the key takeaway here is that Bitcoin is not only like somebody said earlier, it's more than just cash on hand, right? Like having Bitcoin is more than cash on hand. It's a very valuable resource that you can use as collateral. You can use to enhance your yield or an interest, and make sure that you are funded without having, even without having access to traditional tools like corporate debt, for example. And again, that being said, these options will come increasingly available to large players. And I think the first trend there would be hybrid sort of solutions where you have partial collateral in Bitcoin, especially for particularly large sizes. So somebody looking to raise $25, $50 million wouldn't be able to do it purely based on a corporate debt, but they would be able to have a mix, for example, maybe half collateralized by, let's say, by Bitcoin, half by their land, their technology, their other assets, and of course some of that by the machines. So I think that's where the industry is going. And again, to give my personal opinion, it would take all those players. So native lenders like ourselves, traditional finance funds and institutions. It would take exchanges building out the trading tools. It would take brokers to structure those financial products. And in the end, everybody will win from this maturation in financing options, I think.
Yeah, I think it's, thank you for this input. Obviously, if someone needs more information, I mean, we can follow up separately, because especially on the structuring. But what I think everyone here is just will agree on that we see actually in the last, I guess it's the last few months. I mean, there's more and more positive development. It's clear there's a solution coming through. At the moment, it's not clearly should be seen as a sort of competition among the players, because the sector is still untapped from that perspectives. And I think any solution that come into the market, they are additional, because I mean, as Kirill, you rightly point out, I mean, there is a let's say, I always perceive it that there is a different type of investor who basically, or let's say the debt provider, we're looking for different risk profile. And basically, that's why you can collateralize either the BTC, which is the most sort of easiest one from an inventory perspective, basically a more liquid one, especially for the guys who come from, let's say, the trading venues or the trading desks. If you go for guys who are actually more, let's say, the traditional banking, for project finance, is what Igor mentioned, basically. And there's already a few players on the market who are actually coming from a banking background, and they're coming in and sort of perceiving the projects as they usually do in project finance, and see what collateral they can take in terms of the hardware, you know, some additional pledges on the site, you know, on a land or something like this. What Igor mentioned, is, I think, from a client side, and this is what we saw and we covered in our previous also webinars, is it's the actual sort of the new instrument which comes out of the hash rate, which is, I think, was one of the interesting and fascinating developments. So clearly we have a sort of the mix from a different type of instruments that are available now, that becoming available now. And I think there would be interesting sort of steps going forward, because I think we already had a question here somewhere about the financing lending options. And I think this is where this is, it's picking up. And I think what Alejandro said, I think it's clearly that I think it was the huge sort of milestone for the sector, because I mean, the mining pool, first time is stepping in, you know, and collaborating sort of with established sort of entity as well, to providing this is, which is excellent tool for working capital sort of financing. So I think we have a closing on the time. So I mean, shall we? If someone wants to make any specific remark on about some of the things that basically, or share views, or we can go through the questions. I mean, yeah, sure. Okay. Shall we look? Okay, let's. It was one which is very interesting, and it's mining on nuclear power. I don't think anyone here is on nuclear power plants now, so just that was easy one to answer. I think there was from Vincent, I see there's a question about, I guess, around the fees. I think it's probably just a general thing on the market. I think maybe, I don't know, Alejandro, if you want to add on the fee structure, because we saw these big jumps, you know, on a fee revenue.
I think you know, people need to keep in mind that if there's a lot of transactions in the Bitcoin network, then there's many fees because there's a limited amount of block size in each block. So there's a fee market that develops. If there's many transactions, then the fees shoot up naturally. Most mining pools like Poolin, we give the fee. We give the fees to our miners. We take the fee on top of. We take our own pool fee on top of the fee of the transactions and the block reward. So ultimately, many transactions in Bitcoin network equals more fees for the miners, which is more money for the bottom line. So everyone's happy. It's so and basically in so many words, it's not a bad thing when there's many transactions and the fees are being recouped by the miners, which adds a lot of money to each miner.
And I think this is what a lot of probably guys can observe it, and I'm sure the guys from here can share with you that after the halving we saw it basically. It's like clearly was a jump which eventually sort of was reduced in the volume of fees, but yeah, that was the additional revenue. Okay. On the GPU ASIC, I think we covered that. There was an additional point about, I guess, on a larger market share for AI and machine learning at times ahead. I guess this is a more towards the infrastructure business and GPU. Maybe from Advania point of view, you can add on that as you see wider range of clients there.
Yeah, for sure. I mean, I guess Lukas can pitch in as well. You know, Genesis have been moving over to that market as well. So they've been doing very well in the, like, going into the enterprise cloud business. We do a lot in HPC and AI as well. You know, we work with, in the regular enterprise business with HP and Intel offering, cloud resources for some of the large companies in the world in automotive and stuff like that. And we've been seeing, Genesis mining, like, you can utilize these GPUs for that, utilizing the GPUs for enterprise business. When you have the business for that, and when the GPUs are not in use, you could use it for mining altcoins and therefore, recover your investment sooner than expected probably. But I think Genesis Mining is a perfect example there. I mean, they have done very well in building up their Genesis cloud services, and I think that's definitely a good point. And we are seeing more companies focusing on HPC and AI because the HPC market is quite a bit far behind in the cloud, like moving into the cloud services. So I think we will see a shift there also in terms of like GPU miners focusing on that as a side business.
Yes, yeah, maybe one point to add on that. Yeah, it's thanks for all of the praising, Aegir, but it's true. Genesis Cloud, which is part of the Genesis group, is very much focusing mostly on the rendering markets, and but is taking on more and more services, and they are performing on this side very well. However, still on the specific ASIC or GPU chip side, we don't see it in the near future that exactly the same types of cards and chips will be used for both services, but probably there will be a step in between where you have probably specific sections of a data center which are focusing on specifically these types of services, benefiting from the low electricity costs, and then you have other sections where you focus more on mining. But hopefully it will be possible also that you can really switch on the hardware side.
Okay, so I think we almost closing on time. I just wanted to maybe throw one more provocative comment. Taking into account all the developments that are taking place, I mean, on the hardware side, I mean, with the story, what we see with Bitmain is basically, I think it offers a huge opportunity for MicroBT, I guess, in the meantime. But let's say from all the developments taking place on the price, basically, what's basically your view? If you look in the end of Q3, which is basically the end of September, what do you see? If you want to comment or you don't want to comment, but what could be the hash rate difficulty in the price? We're obviously not going to be.
You go into the easy. You start with the easy question. Oh, I'm not gonna speculate.
No, okay.
Leave it up to someone else.
All right. Good. Okay. Yeah.
I'm just gonna leave one comment about the price. I think the elections in the US are going to be hugely influential. Whatever way it goes, there will be a change coming after the election. So this will be a time to look out for. That's my personal opinion.
I think if the price of Bitcoin stays around this price or increases gradually, I think the hash rate will also reflect similar trends, and as in it will continue to increase, perhaps slightly, but so I think I hope that the price and the hash rate will continue an uptrend. I don't think it's going to be something crazy, but I think it's just going to be slightly increasing over time.
Okay. Yeah, I think we have. I think in an hour, I guess we're probably going to see another reset on the difficulty with additional increase. So I guess we'll see the new sort of developments will mark in tomorrow, which is a great thing. Okay. Well, basically, I think I just wanted to say then thank you for everyone to joining. I mean, for discussion. If it's any questions, which basically we can always follow up or offline, online. And yeah, guys, thanks a lot for everyone for joining.
Thank you, guys.
Thank you.
Okay.
Very much. Bye.